If you also have investments in crypto or Ethereum, and you're worried about losses, then this video is for you. Make sure you watch it until the end. Right now, Ethereum is under serious pressure. Big institutional investors are pulling money out, and public trust in the market is falling. But even with all these challenges, Ethereum still has strong long-term fundamentals. Things like upcoming network upgrades and blockchain infrastructure growth continue to support it. In recent weeks, institutional investors have shown more interest in leaving the market. Still, Ethereum's role in DeFi, NFTs, and Layer 2 solutions keeps its core value strong and paints a hopeful picture for the future. Now, let's talk about the record-breaking outflow from Ethereum ETFs. During the week ending September 26, Ethereum Cash ETFs saw an unprecedented outflow of almost $800 million. This was the worst performance since they first launched in early 2025. Investors pulled money out for 5 days in a row. On September 25 alone, about $251 million left the market. BlackRock also played a key role in this trend, selling close to $200 million per day, putting huge pressure on Ethereum's price. And it wasn't just Ethereum. Bitcoin ETFs were also hit hard, with nearly $900 million flowing out. In total, about $1.7 billion left crypto ETFs in a single week. This shows investors are becoming more risk-averse as prices fall. Even with this heavy pressure, the net inflow since ETFs were launched is still around $13.37 billion. That number shows there's still fundamental demand hiding in the background of the market. Now, let's look at on-chain fundamentals and investor behavior. Ethereum is still one of the most stable blockchains out there. Since it launched in 2015, it has run almost without interruption. But recent data shows that long-term holders are starting to sell their assets. The liveliness index is moving upward, which signals more spending from these holders. At the same time, some funds are leaving exchanges and moving into cold wallets. That could be a sign that certain large investors are accumulating Ethereum for the long run. Next, let's talk about upgrades and the positive technology outlook. Future upgrades like the Fusaka hard fork could act as a key catalyst to rebuild trust in Ethereum. These upgrades don't just make the network more scalable and secure. They also reduce transaction costs, which creates a better environment for decentralized applications and the DeFi market to grow. Still, social activity has dropped. The lack of hype, or what we call FOMO, shows the market is stuck in a waiting phase. Many traders are not sure whether to jump in or stay cautious. Now, let's move to retail traders and their expectations. Even though institutional money is leaving, many retail traders still believe Ethereum can reach $5,000 before the end of the year. Media and political support has also played a role. For example, comments from Donald Trump increased discussions for a while. But those effects were short-lived. They didn't change the flow of money in the market. This proves that the market reacts more to real investment data than to headlines or political statements. Now let's zoom out to the bigger picture, macro risks and correlation with the stock market. Federal Reserve policies and the possibility of easier financial conditions could send more liquidity toward altcoins like Ethereum. But at the same time, Ethereum is now highly correlated with global stock indexes. This creates a new risk. Traditional market volatility is now directly affecting Ethereum's price moves. This connection could make both corrections and rallies even stronger. Next, let's talk about key technical supports and resistances. From a technical point of view, the recent correction after Ethereum hit its all-time high looks natural. But the continued outflow of funds and bearish signals in indicators like the MACD raise the risk of Ethereum dropping to around $3,300. On the other hand, if Ethereum can stay firmly above $4,500, combined with fresh inflows of capital, it could kickstart a new rally. That rally might push the price toward the $5,000 target again and revive the bullish trend. Now let's wrap up the fundamentals and long-term outlook. Overall, the short-term outlook for Ethereum is cautious and slightly bearish. That's because of fund outflows, the risk of liquidations, and sensitivity to macroeconomic data. But looking at the long term, if Ethereum can hold key support levels and successfully complete its upgrades, it has the power to grow again. It can re-establish itself as the backbone of the blockchain ecosystem. Now let's check Ethereum's market status as of September 29, 2025. After hitting an all-time high around $4,880 in early September, Ethereum went through a heavy 23% correction, dropping the price to $3,875. This drop pushed many short-term traders out. But the bounce back to $4,142 shows buyers are still active at lower levels. The market still has potential for recovery. Looking at the daily chart, Ethereum broke below the lower boundary of its midterm rising channel and is now in consolidation. A bearish flag pattern or trading range is forming. Even though the highs and lows are getting lower, the long lower shadows on the candles show that liquidity is entering its support zones. Key support for Ethereum lies between $3,850 and $3,995. This range has stopped further drops several times. If it breaks, the price could head toward $3,626, confirming a deeper midterm downtrend. On the upside, the immediate resistance is between $4,200 and $4,211. Breaking above that would open the door for a test of $4,421, and later $4,650. Now, let's check the RSI and market conditions. On the daily timeframe, the RSI stands at 68.67, which is close to overbought territory. This means buying pressure is strong after last week's sharp drop, but at the same time, it increases the risk of another short-term correction. Positive divergences in lower timeframes are still helping buyers, and they may support a relief rally. The MACD indicator is still in a bearish phase and under the zero line. This shows momentum is still weak. Selling pressure hasn't disappeared yet, so the overall trend needs caution. But a possible bullish crossover in the coming days could be the first sign that buyers are coming back. Now let's talk about Bollinger Bands and volatility. Recently, Ethereum fell below the lower Bollinger Band. Right now, it's trying to move back toward the 20-day moving average near $4,421. Usually, this kind of behavior leads to a mean reversion. But the declining trading volume shows the market doesn't yet have enough energy for a strong breakout. Looking at the stochastic oscillator, it's in oversold territory and showing signs of a coming golden cross. That could set up a short-term rally. Meanwhile, on-chain data shows the liveliness index has hit its highest level in a year. This confirms more supply is coming from long-term holders who are taking some profits. Now let's look at derivatives and side risks. The derivatives market shows a drop in open interest and a high long-to-short ratio of about 2.73. This means if the market drops further, long positions could face heavy liquidations. That situation often creates sudden spikes and sharp volatility. Traders need solid risk management to avoid unexpected losses. Finally, let's bring everything together. Ethereum is now at a critical turning point. If it can hold the $3,850 zone, it may start moving toward higher resistances and even attempt to retest the $4,500 to $4,880 range. Breaking above that zone would invalidate the previous top and activate new targets around $5,000. But if Ethereum loses its key supports, the market could face a deeper correction toward $3,300, which would make October especially volatile. So, to sum up, Ethereum's short-term picture is uncertain and a bit bearish. But its long-term fundamentals, combined with upcoming upgrades, could bring back growth and strengthen its position as one of the pillars of the crypto world.